US dollars. We just can't get enough. There is only one bet in town right now, and by town I mean the whole world. The US dollar is by some distance being bought far and above everything else at the moment. Check out this chart of US dollar compared to other major currencies. Then check out this chart of how it's performing against the S&P 500, the major blue chip stock index in the United States. Meanwhile, here's a third chart showing what's happened to Bitcoin versus the US dollar just this year. So what's going on? Why is the dollar so strong right now? Well, one answer is something called dollar milkshake theory, and we're going to talk about it and the implications of it for crypto right now with Alex Tapscott. He's Managing Director Digital Assets Group at 9 Point Partners. Alex, thanks for talking to us. So, dollar milkshake theory, it sounds weird. What is it? Why is it so important right now?
Dollar milkshake theory isn't really a theory, it's a fact. Every time that there's a liquidity crisis or financial conditions tighten, there's a flight to the dollar. Generally speaking, the US dollar is the most liquid asset by far. When everything's going to hell in a handbasket, the US dollar acts as a safe haven. I think of it less as a milkshake and more of a blender. It's like all these assets are going into a blender and just getting churned up into pulp. Which makes them unrecognizable to what they looked like before. And then, I don't know, the US dollar is the one thing that ends up, coming out of the blender. Because all of these assets have been just absolutely pounded in the last little while.
Okay, so why is that a bad thing?
Well, the US dollar is good, I suppose, for American consumers because, goods that are manufactured elsewhere, paid for in that local currency end up maybe costing a little bit less in US dollar terms. But in general, like a super duper strong US dollar is not really good for the US because the US is part of a global economy.
So what does this mean then for Bitcoin specifically?
Bitcoin has become a multi-$100 billion asset class, and it's far more widely held now than it used to be, including in a lot of institutions, on a lot of balance sheets, in a lot of different publicly traded funds. So naturally, if someone's an investor in the markets, whether it's in the stock markets or in crypto, and they're looking for a way to, reduce risk, they will sell what they have to buy dollars. And what they have could be stocks or it could be Bitcoin. It's kind of irrelevant, I think, for a lot of people. They view them as more risky and would prefer to be in cash, which is funny because Bitcoin, was always viewed as something that could potentially act as a safe haven itself in times of currency crises. I think that can still be true, but any asset that's at Bitcoin's size is just going to get steamrolled by the US dollar. I mean, it's, even at its absolute peak, it was less than $1 trillion in value.
All right, so that's Bitcoin. Let's broaden it out and look at the rest of crypto, the rest of Web3. What does a strong dollar mean here? What are the implications of dollar strength for the industry in the short term?
What's interesting is that for the first time, a crypto bear market has coincided with a macro bear market. So I don't know, there's like misery loves company and we're all kind of stuck in this sinking boat together. But the only difference is that I'd be much happier, on the Bitcoin life raft than on one of these other life rafts because, or crypto more generally, because I know that notwithstanding the current cyclical trends, there's a long-term sort of secular bull market that's going on in this asset class. Basically, what that means is that this is a technology, it is growing in relevance and importance, it's becoming more widely used, and we'll see through this period of instability, and on the back end of it, more people, more of our financial world, more markets, more assets will be digitized, more people will be using these applications. The platforms that people are working on, like Ethereum, will be more useful, more widely, the assets will be more widely held.
All right, I know you might be loath to tell us what you think is going to happen, but I have to ask, where are we going to be at the end of all of this?
Yeah, well, to paraphrase a Blue comment, predictions are like elbows, everybody's got them. Crypto cycles generally happen like clockwork, but we've only had 3 of them, really. So it's hard to say, like, from 3 is not a sufficient sample size to predict the future, and, past events are no predictor of future events anyway. So I think we go through a period of consolidation. I think ultimately What's interesting to me is not only fund flows into the asset, but application building or like I would say user flows. Ultimately, like the demand side of this equation is more important than the supply side. Like if more people are using Web3 applications and more builders are developing stuff on these platforms, then in the long run that is going to accrue to the value of the underlying assets. The tokens will, the number will go up.
All right, thanks so much for your time there, Alex. That was Alex Tapscott from 9 Point Partners. Now, when I say Portugal, what's the first thing that springs to your mind? Is it Cristiano Ronaldo? Quite possibly. Is it the food, the wine maybe? Or is it the fabulous nightlife? Well, you can now add the thriving crypto scene in the country to that list. Forkast's Nikita Koirala is about to tell us how crypto has taken hold of the country and where it might be going from here.
Dramatic limestone cliffs hugging the shoreline, stunning beaches, and terrace vineyards. That's Portugal for you. But that's not all. The country has now been nicknamed a crypto paradise by many. A large part of that possibly has to do with the relaxed approach Portugal has had towards cryptocurrencies. At least so far. While regulators across the globe are trying to figure out if cryptocurrencies are securities or commodities, things are much simpler in Portugal. Here, cryptocurrencies are considered just another form of payment, at least for tax purposes. That means individuals are not taxed on any profit they make from crypto trading.
It's not that Portugal taxes crypto. What happens in Portugal is that crypto is not yet regulated. There's not a law about crypto. So crypto is not considered a taxable event. It's not considered a taxable asset. Therefore, crypto is in this void, and because of that, you cannot tax it. What foreigners that are coming to Portugal are taking advantage of is the fact that you can trade, yield, stake crypto in Portugal and not be taxable about that. Why? Because it's not capital gains. It's not an asset. It's like it doesn't exist.
As a result, many crypto investors have made Portugal their new home. Didi Taihutu, avid Bitcoin supporter and digital nomad since 2016, is among those who have chosen to settle down in the country.
There's millions of reasons why we decided to move to Portugal. It's a beautiful country, it's beautiful people, it has a lot of sea and beaches. It's still affordable, like it's one of the more cheaper countries of Europe, and it has massive Bitcoin adoption, and you pay 0% tax on Bitcoin. So I think all that combined makes it the perfect package for me to be in Portugal.
You could spend a day under the Portuguese sun, sipping a cool drink and getting a massage without spending €1. How, you ask? By paying in Bitcoin. What else?
So, you can get sailing classes to pay with Bitcoin. You can go to a fish restaurant. You can do an adventure park. So, yes, the adoption is massive here, and it's which makes it more easy for us as a family to live here and spend our Bitcoins.
And there's plenty of real estate to buy with Bitcoin as well. In fact, Portugal's first real estate transaction took place earlier this year in May, fetching the seller 3 Bitcoin. And it's not just real estate. Your crypto holdings could also get you a fancy new set of wheels.
You can go to a car garage and buy a car with Bitcoin. It makes it a little bit more easy.
However, the good times may not last forever. Mariana Mortágua, an opposition MP in the Portuguese parliament, who is also an economist, has been quite vocal in her anti-crypto stance. And it's not just the opposition. Portuguese Finance Minister Fernando Medina said in May this year that cryptocurrencies will be subjected to taxes in the near future. Medina has been quoted saying, "Many countries already have systems. Many countries are building their models in relation to this subject, and we will build our own." But there is still hope, as 2 crypto tax bills proposed by the left-wing parties were rejected by the country's majority ruling party in Congress earlier this year.
As regards to taxation, we can only speculate as to which direction Portugal will go and sort of what tax rate they might land on. I think if they are very serious about their policy of being a crypto hub, then they probably would be keen to protect their tax advantage versus other EU countries.
But can Portugal set a path distinct from the rest of the European Union, of which it has been a member since 1986?
We do things our own way, although of course we are in the EU, but we have our independence and we do things our way. So I don't think that crypto in Portugal will change anytime soon. I really don't. Regardless if the European Union regulates it or not till the end of the year, that will not change a thing in Portugal at this moment.
The EU has adopted a much stricter approach when it comes to regulating crypto assets. Markets and Crypto Asset Regulation, more commonly known as MiCA, was first proposed in 2020 to regulate the use of blockchain technology and cryptocurrency in Europe. Recent reports suggest the bill is close to being finalized, which could give crypto exchanges access throughout the EU, even if they have been registered in just one European country.
Once MiCA is in place, it will apply to all EU members, Portugal included. So what that will do is it will level the playing field amongst the EU member countries. There will be sort of a single standardized regulatory framework, licensing framework. If you're a crypto company looking to enter the EU market, you will need to be regulated and licensed with the European Banking Authority.
But it's looking a bit rough for crypto exchanges in Portugal. CryptoLoja and Mind the Coin were the first crypto exchanges to receive approval from the Portuguese Central Bank last year, but they've already hit troubled waters. According to reports, major Portuguese bank Banco Santander and Banco Comercial Português have shut down CryptoLoja's account. Mind the Coin is also struggling with shuttered accounts, but crypto firms continue to be keen on Portugal. 7 firms have been granted the Virtual Asset Service Provider, or VASP license so far, and a dozen more are set to be in line per local media, including Binance, the world's biggest crypto exchange by volume. Despite all the challenges, Portugal's love for all things crypto is thriving, and as long as crypto usage and adoption finds a community and government support, the country could live up to its title of crypto paradise. For Forkast, I'm Nikita Koirala.
Well, if you'd want even more details on the latest development in Portugal's blockchain scene, head on over to Phil Lisbon's Summit. That is running from October the 30th to November 4th. That is it for this episode. Like and subscribe to this video for more content like it, and let us know your thoughts in the comments.